In this last section of Chapter 16, we'll be preparing a post-closing trial balance. There aren't many slides to go through for this lesson, but our work and the work together and application will be pretty involved. So closing entries do not change asset and liability accounts such as merchandise inventory. Revenue, cost, and expense accounts such as sales have zero balances. 3 closing entries affect income summary. The $635,345.90 credit closes the credit accounts. The $59,889 debit closes expense accounts. The $79,896.57 debit, 3 Green's net income after federal income tax, is closed to retain earnings, leaving income summary with a zero balance, which is good because that's a temporary account and it needs to go away at the end of the fiscal year. The $15,000 balance in dividends is also closed to retained earnings, leaving dividends with zero balance. The ledger is now ready for the next fiscal period. A post-closing trial balance is prepared to prove the equality of debits and credits in the general ledger. Account balances on the post-closing trial balance agree with the balances on the balance sheet shown in page 491. If I go back to page 491, it says, account balances on the post-closing trial balance agree with the balances on the balance sheet. Post-closing trial balances. All right. So first of all, we're going to write the heading, post-closing trial balance heading on 3 lines. The company, the post-closing trial balance, and the date. Next, list all general ledger accounts that have balances in the account title column. And then list all of the, write the balance of each asset account in the debit column. Write the balance of each contra asset or liability and capital account in the credit column. And then write the word totals on the next line below the last account. Right there. Total the columns and write the totals, 271,000, etc. on the totals line. Verify the column totals equal. Rule double lines below both columns. And we're good. Okay, discuss the last sort of tying everything up with a nice neat bow. Service and merchandising businesses use a similar accounting cycle. The accounting cycles are also similar for a proprietorship and a corporation. Variations occur when subsidiary ledgers are used. Variations also occur in preparing financial statements. So this is our cycle for a merchandising business organized as a corporation. First of all, we have source documents, and they're checked for accuracy, and transactions are analyzed. Next, transactions are recorded in journals. Transactions from information on the source documents are recorded in journals. Third, journal entries are posted to the accounts payable ledger, the accounts receivable ledger, and the general ledger. Fourth, schedule of accounts payable and accounts receivable are prepared from subsidiary ledgers. Fifth, an unadjusted trial balance is prepared from the general ledger. And then adjusting entries are journalized. Seventh, adjusting entries are posted to the general ledger. And then eighth, an adjusted trial balance is prepared from the general ledger. And sort of a shoot off from number 8, financial statements are prepared from the adjusted trial balance. Then closing entries are journalized. Closing entries are posted to the general ledger. And a post-closing trial balance is prepared from the general ledger. That is our cycle. Which accounts and balances are listed on a post-closing trial balance, and what order are they listed? General ledger accounts that have balances. Accounts are listed in the same order as they appear in the general ledger. What is the purpose of preparing a post-closing trial balance? To prove the equality of debits and credits in the general ledger, to see that everything balances at the end. What two steps in the accounting cycle occur after adjusting entries are posted to the general ledger? If you go back to the circle, let's see, after adjusting entries are posted to the general ledger. That's number 7 in the circle. So we would look at number 8, which is an adjusted trial balance is prepared from the general ledger, and number 9, financial statements are prepared from the adjusted trial balance. And that's it.